GE's up in the pre-market. JP Morgan analyst Stephen Tusa upgrades GE to neutral from underweight, a rating he has had on the stock since May of 2016. He says he sees a more event-driven, balanced risk-reward at current levels, and that what he calls known unknowns are now better understood. Tusa is maintaining that $6 price target, saying that a material equity raise could be necessary. We've been waiting for this, Jim, so now what does it mean?
Well, first, I just want to praise this guy. This is some of the best research I've ever seen. A lot of it was actually reporting and research. It's almost like this was a Pulitzer Prize winning piece of journalism here. And I would say that he's basically saying they still need to do an equity raise. I sent him congratulations. I just love to have him come on because this is just really victory lap time. What I thought was really interesting is they still need to raise capital. He's got a neutral on it. Of course, that does not mean a buy, but I get the feeling that if they raise capital, he would go to a buy, and I think you'd have to buy the stock. I think like America will want to buy the stock because we all love the company. I think Culp is doing a very good job. That's not emphasized enough in this piece, but I think that he likes the transparency. He likes to think that going to walk before they make me run. Right. I like it. This is just quality research. Congratulations to him and the research department.
I like the line, it's possible the company can execute its way through an elongated workout. Right? That's the kind of thing you've been waiting to hear.
Yes, and I think Larry Culp, and knew him at Danner. Larry Culp's really good. He's approaching this with a level of rigor and also with an outside set of eyes. And he likes what he sees. He knows he's got a lot to do. He knows he didn't get a great hand. But he's optimist and he's a realist, and that's really fabulous. And I think that Tusa felt some of the confidence that Culp has.
All right. Now, on a day we get this, you also get UBS trimming their target to 12 from 13. Well, but you think there's some consensus building here in the single digits? I mean, Tusa does have downside risk to 5.
And one thing, I mean, he is saying, look, that they do not have the horses, is the way I look at it, meaning that they're just not as good as all the other industrials that he follows, but it's discounted. It's discounted, and they do the equity deal. It'll be fine. This is where we differ from the bulls who estimate $1. They don't think you can do $1, so therefore it shouldn't be in the double digits. But there was an overwhelming fear that he would let this thing go to 2 or 3, and then it would be past time. So the fact that he went to the devil's number, 666, and upgraded it, actually traded at $6.60, shows me the tenacity this man had. That he knew that this thing did not have all the $100 billion, using a liability number, namely $100 billion in net liabilities. That's a lot. But Culp's not daunted. Culp is confident. Culp's got a path. He did another split off of something that people didn't think was worth anything today. Look, if you were short it, you certainly cover. If you own it, you would not sell it.
Right. And if you don't own it,
wait for the equity.
Wait for the equity raise.
Because I think he's been right about everything. Why is he going to be wrong about equity? If I were Larry Culp, I would say, you know what? $7.54. This thing is now up 12% from its low. Thank you, Steve Tusa. Let's do a gigantic. I don't know what he can do. Maybe a convert, or you can do equity because we don't want more debt. And I think America wants that deal. America would like to buy that deal because it would solve a lot of problems. The one thing I still worry about is long-term care. I don't think anyone can get their arms around long-term care. But the fact is that if Tusa says it is no longer going, how about this, broke, then it ain't going broke.